Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. Okay, so let's get into it. We got lots to cover as always, but I think more importantly this week is just making sure we're staying on the right side. So we've had four market stops this week. Well, not just this week, but over the last part of last week and early this week, where we're halting trading to the downside. And so four stops is not a go long signal. The point I want to make. We're still in very volatile times, and we're going to talk a little bit about that. So, global breakdown continues, obviously. A look through the China stocks. I think you'll find this fascinating because one of the things I'm expecting is the China stocks to turn up. And when I go through them, it's a pretty mixed bag. Anyway, we'll share that again just to keep using that as a method of kind of tracking this. Falling knives investing. So there's lots of things that have plummeted. And the real question is, are we there yet? And so I want to talk specifically about that and maybe some strategies to help us be a little more careful. If you're a real quick day trader, you might be able to make some money in here. But I think for people that are trying to buy and hold with the swings in the percentage moves both directions are just crazy. So that makes it very difficult for people who are trying to buy and hold. VIX has broken the uptrend on the daily chart. The only point I want to share with you on that is we were up around 85, now down around 75 or 70. So let's talk about that. Energy got demolished, and now Texas is considering controlling production. So one of the big things that happened with energy specifically was the Audis in Russia have been trying to control output. And while they were trying to do that, the US market, the Canadian market, we kept plowing forward with more production. And if they were going to cut back and we kept filling it, obviously that was a problem. So now they were going to start controlling production, or they tried to control production, and they were getting fed up with more continuing to come on as they cut. So just while they were about to launch all of this oil onto the market to kind of correct the market and get people to pay attention, all of a sudden we've had this COVID-19 situation show up, and it's going to crush demand. I mean, let's just pick a number. If the world was going through 100 million barrels a day, we'd probably go through 80 instead. So with that rapid change in demand, it literally crushed all the energy companies, and to a big extent. Well, one of the things that I just saw was a Wall Street Journal exclusive saying Texas is actually mulling controlling production. And why that would make sense is that if the whole world slows down their oil consumption and everybody participates in the pullback in oil production, then all of a sudden we're probably going to build a floor in here and it could go up. Otherwise, we're going to have barrels sitting on the market, and it'll be a long time before we climb out of this hole, which will probably bankrupt the capitalist systems that we operate in, or the free market systems that we operate in, and the sovereign nations like Russia and Saudi Arabia could obviously live that out with government backing. So anyway, it's an interesting situation that we find ourselves twisted in, and if we get time, we're going to go through that. So let's jump into it. Okay. So first of all, Thursday I'm recording this Thursday night because nobody's in the recording studios at StockCharts, but I'm recording this after the close on Thursday night. And one of the big things to just keep in mind here is, the Nasdaq had a beautiful day here, up 1.58, whereas the S&P was only up 0.5%. So I like it when the Nasdaq leads like that. That gives me some hope. There's a couple of technical things going on regarding vaccines and treatments and that kind of thing. So with all of that in the background, the market needs some sort of optimism here. But I would just say that the big trend, one of the big things we need to focus on is that when something breaks this hard, this fast, usually debt starts to come into play in the markets, and I'm more worried about that. So I've mentioned the European banks as being a problem for the last couple of weeks, and I'm still focused over there. The main point I would like to make here is that the the market is starting to turn a little bit towards a positive sentiment, but I think we're going to have to work through a whole bunch of pain here, and I don't want to encourage people to rush in if you're a long-term trader. We don't have that data yet. So here's our VIX situation, and one of the things on this chart, so you can see that this PPO went to the moon, and we have the actual trend in the VIX higher. Here was our 85 print yesterday. We closed at 72 today. Now what I want to do is just take this slider back and just, when we get up around these types of levels, it's pretty high, obviously. And I'm just going to grab this arm. So the way this slider works, if you grab the left side, you can control the start and end date. So I want to control it in 2007, and on the end here, you can see the boxes are over here on the right. And then over here, you can control how this works out. So what I want to show here is back in 2008, we had the same thing. We had this ballistic move in the VIX. And one of the important things, here's the S&P 500 in the middle. And if you take this October period, it chopped around in here while making the low. There was a rally for roughly a week or two. And then it went on to lower lows. And I mean, this was after the Lehman crisis. So lower lows. Then we rallied out of the November low into the early January high, up over 900. And then we fell again from there all the way into the final lows at 667. So you're looking at this major drop down here after all of this drop, and that was after the spike in the VIX. So one of the things I heard from investor in Canada was, try and look at when the VIX is dropping below 40. So if we just do that, let's just put a horizontal line on the VIX at 40 and just get an idea. This is just okay, what did I do there? Horizontal line. Oh, I got to put in a value. That would make it easier. Sorry about that. So here's our horizontal line at 40. And just if we pick that, that's going to get us down here in this real rough early April timeframe. That would have been a month later, but at least we would have had a period of declines. When the VIX is oscillating this big, again, these moves in here, for the S&P 500, this was a 2-week move. Now it's a 1-day move, moving 200 points or 10, roughly in this case, about 10%. Well, we've had some 10% days recently. So extremely high volatility. And as that volatility comes down, it's going to be very tempting to go find the names you want to own. And I fully agree. I think the one thing you need to consider is if it continued to decline due to other forces, just be aware. So one of the examples of that would be, this started out as a housing and mortgage finance deal. And by the end of it, it was the car companies getting bailed out, trying to keep people at work, trying to get consumers to shop again, all that kind of thing. So be careful about trying to jump in, because we're going to have a whole set of issues in consumer discretionary, a set of issues in, I think consumer staples have held up well. They'll probably roll over hard when people go looking for more growth elsewhere. Utilities, we think utility demand is probably going to drop here. So that makes for a problem investing in that area. Energy, clearly going to have a big pullback in that. When materials, when you go through, all of these things are getting hit pretty hard. And most people think technology will not be hit as bad. I will just say that usually once people get really, really scared, they're even afraid to go specifically into an area of the market just because they've lost so much capital. So try and focus on understanding how previous examples went with the VIX way up here. And again, a quick sharp pullback for 2 weeks and then another acceleration in the VIX. the momentum indicator didn't even pick up that second wave, but you can imagine that if you were investing in here, this was pretty tough times, and all of a sudden this huge pullback after just getting back up to, relatively speaking, I'll call it a consolidation range, and then failing again really hard. So make sure you're aware of what you're in for. So now that we have that set up, let's just take it over to the right here. And I just want to go pick the date, current date, and then we're just going to grab this 2017. It's probably good enough. And again, refresh your memory on this. I suppose I should go all the way to today, right? Why don't we just do that? That would work better. Today, there we go. And update this. And the point is, on here, again, we've had this big vertical move. We have lots of time to see this unwind and get a little calmer. Like even down in the 40s for the VIX would be a big deal, and that would be, almost half. So I would encourage you to think about that. I thought it was a good analogy to just pick some level on the VIX to kind of work toward. And at least if you got back towards 40, that's kind of some of the interim spikes that are still extreme. We used to, we were thinking when the VIX got up around 20, it was pretty high. Well, clearly this 50 level is big. So anyway, that might give you a target to shoot for on the VIX. The next thing we wanted to cover off were the China stocks. And the one thing I'm a little bit surprised at here is that as we work through these China names, we have, let's just pick 1 month. So here's the month. And again, only one of them are positive over that whole period. And if we just do the last 1 week or whatever, none of them are positive, even though China, we think China's kind of got this behind them. So the hard part for me to understand is, when are these stocks going to turn around? And again, I would have thought they would have already turned around. But here's like Melco Resorts and Entertainment there in Macau. And, that chart is drilling into the bottom right-hand corner. It's probably not going to improve. Here's TME, not going to improve in the short term. Here's Tencent Music Entertainment. This thing's diving off the page. It's down another 20% here just over the last couple of weeks. So even though the big breakdowns that we've seen in a lot of these names are showing up, we're not getting a lot of, they're not getting the relief that I thought they would, and I thought they might start to rally sooner. They're not, is the point I want to make. So anyway, with that, just real quick, looking at some of these charts, you'll see, I'm going to try and do this differently. Okay, so here's 10 per page, and you just see, they're diving down just like the rest of us. So even once their market started to improve, here's NetEase, it's still holding up okay. It's only down, I don't know, 20% or something, but we're just starting to see some of the trend line tests here. So it might be interesting to watch and see if this whole segment stays pulled back. And I think if that's the case, we're probably looking at a longer correction time than we might otherwise have expected. So here's 58.com, and clearly falling away. This was $70 down to $40. That's the kind of moves we're still seeing in the US. YY is pulling down here from $70 to $40. Alibaba, I thought this one would hold up for sure. It's already breaking down from 231 to 170, breaking through its 40-week moving average last week, and then breaking the uptrend and momentum. So none of these charts are actually starting to hold up the way I thought they would. So they're falling with the rest of the world. And I don't think that's just US investors. I think the bigger issue is their stock is, the stock is different than the company. And right now people don't want to own stocks. So even the China names are getting hurt. One of the other big things that we've noticed obviously was the Nasdaq was outperforming. And I think that's a critical thing to be aware of. One of the big names, obviously, has been Amazon is getting all of the home delivery while people are self-isolated. And with that experience is they're going to hire another 100,000 people, and that stock could do really, really well. It's got to be one of the better performers, 96.1% on the scooter ranking. So it's really taking off to the moon and holding up very, very well. I think it'll obviously, have a wonderful 2020 and probably a more interesting name to buy. But if we just look through, I haven't changed the sort order of any of these. They're just alphabetical. But looking at them, a lot of them are trying to consolidate around the 200-day moving average, the ones that were really strong before. Here's Broadcom, clearly bombed out. But the reason I think it's important to do this is to go through and look and see where stocks are. And one of the big names, obviously, is Apple, which should be on this page somewhere, starting with A. Let's go back, and here's Apple. It's holding it around its 200-day moving average. When we go back and look at how things worked in the 2008 slippage, there were big pullbacks, but some of the stocks were able to hold their lows. Nothing held above the 200-day moving average. And in this current case, we've still got a few names sitting up around there. I think the more important question would be, as we go through and we get all of a sudden a lot more deaths and pressure is mounting in Italy for even tighter controls to try and get people to self-isolate, can we get enough focus that we don't actually have a wider, longer, protracted issue? And I read an interesting article out of the BBC today, and it was titled that things weren't going very well. But one of the things they mentioned was that it's the continued movement of people, from one place to the other that continues to make it difficult to actually turn this off. So I think the more restrictive we can be sooner, the better, and that could try and hold things up so that this doesn't prolong. Again, it's the debt that I think is a much bigger issue, and that's what the bond market is also telling us. So try and when you're looking at stocks, just because they've held up well here doesn't mean they won't absolutely bomb out if we have a bigger issue. And I talked to a person who is a grain trader and was working to try and hedge the US dollar today, and from Canadian dollars to US dollars. And we were talking about, some of the inputs. One of the big things we're seeing is the massive spike in the US dollar. And what that US dollar spike means, I mean, this is just a crazy move. And of course, the swap windows and facilities that the Fed has put in place to try and make it easy to get US dollars has just sent this skyrocketing. And if we compare this is still from yesterday. When we compare this to the historical level, we had a high around 103. We're at 102. So we've clearly broken over the last 2 years of range. But one of the things I like to do with the US dollar is to look at it on a really macro scale and zoom out here. And we see a period back in here where it was up in the 120s. I mentioned the subscribers, some of the things I was looking at and why I was expecting the US dollar to go vertical. And under that hypothesis or suggestion or theme would be, how could commodities perform well? And they have performed awful. The more important question is, if all of a sudden everybody's rushing to US dollars because of problems elsewhere, and it's either in emerging market currencies or maybe even inside the euro and the British pound, people are bailing out of those currencies and into US dollars. That's a big change, and all of a sudden we're going to see a lot of stress. So what could have held up that Apple chart at $200 or at the 200-day moving average could very well be at risk to a much bigger move because of other factors. And I have to keep telling people the story about I owned Apple at $215 back in December of 2007, and by February 2008, Apple had fallen down to, I'm going to pick a number, I think it was 165, where I finally sold out. And I said I was in the strongest stock in the world. They'd just come out with the iPhone and I was losing money. How does that work? And that was one of the big reasons for me to become a technical analyst. So the main point that I want to point out is just because your stock is strong today, and I saw somebody saying, I'm going to uh, hold this forever. This is my go-to stock. I'm going to die on this hill with this stock, and I couldn't help but think, I've seen that sort of thought process before towards Apple, towards Tesla, towards many different names at many different times. Tesla was $1,000, and all of a sudden it's 400. It's a $600 wipeout, and if you put your family fortune in there, you got a lot of work to do just to get back to where you were in January. So these are really, or February, these are really big changes. So try not to get too hung on one idea. I'm going to ride this stock all the way to the bottom and back and whatever. We don't know where the bottom is, and the VIX is still telling us that things are surging immensely. So try and use that as a benchmark to help you decide where to place your money, and not to get too hung up. So even if you're trying to trade through this, it's a portion of your account, not all of your account. Um, and it's hard work. I will tell you, the whippiness is so hard. You'll make money in two things and lose in the third, and the loss in the third will probably be enough to wipe out the gains in the other two, unless you're a real day trader and you're just going in and out for eight price bars or something. Anyway, a little bit of a story there about why to be so concerned. Now, the next thing that we need to talk about is oil. Oil got smoked. And this is my oil and gas exploration list. And I mean, first of all, look at some of the price closes on these stocks. I mean, here's Apache at $5. It's unbelievable. And that's after it bounced up today. These names are just so washed out and so beaten down. And again, if we were going to get something from Texas and probably Canada and probably Russia and Saudi Arabia to help control the price, then this might stabilize, and this group could probably be one of those groups to pop. So I have always liked energy. But one of the big things that's going to happen here is this is really going to compress macro demand in the short term, and it's also going to compress macro supply. And the reason is because big projects that hadn't been started are definitely not going to get any sort of price momentum and decision making after such a big down shock. So if you're a manager sitting around just trying to hold together the company, and all of a sudden somebody comes and says, "Do you want to put 20 billion into this project?" Very difficult to try and get somebody to sign on to that for a couple of years. So as these big projects continue to not be signed off on, we're not going to get that sort of replacement for the depletion of reserves. So I still think some of the energy names are going to work out fine. You don't have to buy them here. I started to pick away at some of them, actually just at one of them. And the reason, they're 70-80% off, and you're looking at, some pretty strong stock names. So let's just go whatever. Here's DNR. You're sitting here, the stock was $1.68. It's now 25 cents. Like, it's just, these numbers are so fast so far. And I will, encourage you, here was 91 cents to $6. So you don't have to be in a tech name once the market starts to turn back up. So I like to monitor the materials groups and the energy groups and the gold groups for vast amounts of strength. And in my newsletter, I try to communicate, what the summary is: buy stocks, avoid stocks, areas of interest, that kind of thing. So I'm going to show you a little bit about my newsletter here and just bring you in. So this is whatever, I should go just show you the main website. So this is the main page, but up here on the members tab, under the newsletters, for members that are signed in, they're able to go in here and just look through these. And as we roll through the charts, I try to write a story and try to piece together this. Now, in my most recent one, this was before the Monday, where we went down 13%. This is the same movie that played out in 2007, 2008. The Fed's doing the same sorts of thing at the beginning. That isn't the end of the playbook. That's just how they see the big problems coming and how far the market moved down. So anyway, I try to build a newsletter every week that shows people what's going on. But in here, I always try to put in a Schnell Strength Index, and this is an indicator I created. It's currently at 0. We don't need to rush back into the market, and when we do, this is going to have a nice long run ramp where you turn up. This was back December 2018 and went up, and it stayed up here for 5 months. And then in May, it pulled back, and it was a pretty good signal. But the idea being, a lot of people are trying to catch this falling knife here, and I don't think the setup of the charts is anything like a normal pullback or even just a 2-month pullback. The disruption is so major that all of the actions by the Feds, the central banks worldwide, is they see big problems. Now, what you and I don't see are the banking sector themselves. I think it's very difficult here to try and be optimistic on just the broad markets everywhere. There are areas like I think oil's already been slammed so hard. It's at $20. That's 20-year lows. Can it go to 10? Probably. But one of the things about oil is the production levels. Low oil prices will get you low production, and what happens is when they're losing money on every barrel, they just stop producing. So they'll actually walk over, turn off the wellhead, and it'll stop coming online, and they'll stop drilling. And then the market will go through this whole not crash, but rhythm to turn back up. So if I pick whatever, I'm going to pick something a little larger. Let's just go see here if I can find a name. So here's Chesapeake, and that's not even a good chart. I'm just going to go pick CVX, Chevron. So what happened off Chevron here was $57 low. It was a double a year later. Some of the smaller names, they went up, 5, 6, 7 times in that period. But this stock is clearly down here at a very low level. And again, if it's going to go a little bit further, I believe it. I mean, a lot of the Canadian ones were having trouble. They're down in the $10 range, the $5 range, $2 range. So if you wanted to start going to look for some of those, that might be an idea. You're still sitting there realizing that you're either in for a very long time or you're trading through the lows. Okay, by the way, on the website, if you wanted to, I have a sale under the private investors tab. If you're more interested, you can go down here, and if you pick this annual box here and click on the subscribe button, it'll bring you to this page over here, and you fill in your details. And if you put in the network code networth1, it will give you a discount, taking it down from $860 to $497. So under $10 a week, and hopefully there's enough information for you there that $10 a week works out pretty well. So all of those things are adding up here. I just want to make sure that we go back here. So from the falling knives investing perspective, I want to make sure that people understand how severe we are here. We still have a point where the Feds worldwide are just starting the price action, and they have access to more data than we have, obviously, regarding the financial health and how things are going to work out. The Japanese central bank is buying ETFs and stocks. They just doubled their ability to buy more. Europe is doing more. They just had a big package today. Canada is doing something. The UK was lowering interest rates today. All of this stuff is in free fall, and try not to be relative to the price you were paying. These are great values. The real question is how to stop. So anyway, thanks for taking the time to join me. Have a good week. Have a good weekend. Thanks, everybody. Bye-bye.